Morning, everybody. It's the 2nd of March. We are Signal Centre Talking Bull. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Morning, mate.
Everybody, you all right?
Yeah, not bad. Everybody.
Everybody? Just us.
Just us too.
Habits,
Yes.
eh?
Yeah. Yeah, all good at the moment.
Excellent. So, bit of a decent push in markets yesterday. There was, I think, the biggest move higher for a number of months on NASDAQ from what I saw. So pretty exuberant performance across global markets. That has been tempered slightly. There was some news overnight that from China's top banking regulator, sparking fresh concerns about a tightening in the world's second biggest economy, saying he's very worried about bubble risks, which we've been speaking about for what feels like months now. And as a result, we have seen stocks come off a little bit. Today, there was also some increase in coronavirus cases. 735 cases of coronavirus variant emerged in New York City in November. So potentially, so there's a new strain that emerged in November in New York.
Okay. Yeah. That's about the same time it sort of started in Brazil as well, wasn't it? November.
Yeah, so they're saying that it's travelled extensively through the metropolitan area of New York and also now been found in 14 other states. It's one of 5 concerning variants now being tracked nationally by health officials. So whereas in the UK we're talking about sort of getting out of this, there is still a lot going on across the US and Europe as well. We had Prime Minister Boris Johnson yesterday reassuring the public, saying the emergence of the Brazilian variant in Britain, saying there's no reason to think that vaccines will be ineffective against it. So clearly, we're not out of the woods yet, that's for sure.
It's been both ways. Obviously, sometimes it benefits people to have this panic running through the world. So you're getting, obviously the government's trying to calm things down. And I saw some stats yesterday when they're talking about the Brazilian strain. They said it's between 10% and 80% mortality rate. Now, when you say it's between 10 and 80% mortality rate, what are you talking about? It's like, what? Who's the 10%? Who's the 80%? And it's obviously people are classed into categories. And maybe there's sort of like the categories are, people above 85 or 80%, or people, below 50 or 10% chances of mortality.
Didn't we say 6 people had it in the UK?
And this is the thing. They've panic grabbed sort of data from somewhere and tried to present it in a really scary way to cause panic, and it just absolutely infuriates me. But it didn't say where the data's come from, didn't say who's coming up with these figures, just a whole one of those clickbait headlines, which just gets you to sort of like, it gets an interesting or scary looking headline. You click on it and it's just full of a load of shit. I don't know, maybe some people think that they click on Talking Bull and think that's full of a load of shit. Why do they click on that? But hopefully not.
Well, let's hope not. Okay, let's have a look at some charts then, shall we? So first up, we're going to look at some FX markets today. Now, first up, I've got the dollar index. This is a daily chart. What you got there? Buddy and Binky and Buddy.
Yeah,
That's
like
a nice
that,
mark.
yeah.
Who did that?
Chloe's friend Tab got it done.
Oh,
I
that's
think it was
clever.
Tab. It's really cool, isn't it?
Yeah. So dollar index. This is the daily chart. So this is a wedge, arguably, that's formed, and we've seen a bit of a breakout over the last couple of trading sessions. So we saw some buyers emerge at this 78.6% fib level of this swing move here from September highs in 2020 down to these lows that we saw in the early part of January. A little bit of consolidation, found some support here at the 78.6, and now we are seeing a decent-ish bounce higher. We first reached this 38.2% fib level from again this high in September down to this low in January. That seems to be acting as a little bit of resistance this morning, but the breakout of this wedge on a daily chart for me could suggest that we are going to see a reasonable sort of corrective move higher. So in terms of the barriers on the upside that need to be overcome next, as I mentioned, we've got this 38.2 at 91.32. Then directly above that we have the swing highs here from February the 4th, which is at 91.60. So if we can get above here, and maybe retest this to form some sort of support, then it could lead to a continuation higher of the dollar index. And that would suggest that people are shifting towards less risky assets, which may have a knock-on impact on indices and some of these other riskier currencies. If we look at Aussie dollar, this has been in a decent uptrend for many months now, obviously in conjunction with the dollar being in a downtrend. Arguably in a bit of a channel here, potentially a break of that channel on the 26th of February, and maybe a retest underway at the moment. So I'm keeping a close eye on that. If that breaks below 76.92, so below this low that we posted on the break of that channel, then I think that then would trigger a further corrective move to the downside on Aussie dollar. So keeping an eye on that one. Again, you know, an indication of people backing out of riskier currencies. Euro Oz. So this has been in a fairly steep downtrend, obviously combined with Aussie going higher. Decent rally up to the downtrend resistance on this, but seems to have failed so far. If that breaks out, then again we may see people opting to own euros over Aussie dollars. So keeping on that 56.92 level on that. Elsewhere, we've got euro sterling, which is trading in a bearish channel or bearish wedge. We saw a very decent looking hammer candle posted on the 24th of February, which did spark a little bit of a corrective move higher. We had a little bit of a poke above the wedge, but then have failed and closed back within it. So keep an eye on that as well. If we can get a breakout of this wedge, then I think it could lead to a corrective move up here to 88.03, which is a 38.2% fib retracement level of this move here from the highs in December down to these lows that we posted just a couple of days ago. On euro dollar, bit of a messy chart going on here. Let's just get rid of all that. As we know, that's been trending higher with the dollar index moving lower. Been talking about this for a while, about the potential of a top pattern forming here on euro dollar, and I think if we see a break below that level there at 119.52, then arguably we have formed a little bit of a short-term top, and that may trigger a little bit of selling to the corrective move lower. If we look at sort of the trend on that, maybe a bit of a bullish channel, which could also come under, or it has already come under threat and broken lower. So maybe that could trigger further selling in euro dollar. So keep an eye on that level there. Finally, let's have a look at cable. That continues to push higher, but a little bit of a correction underway at the moment on the daily chart. Again, you know, just keep an eye on that dollar index. That really is sort of going to dictate the direction of everything, I think, at the moment. And just flicking back to that, it's whether or not we can break above these levels here, sort of 91.32 to 91.60. And if we do, then I think we will see maybe a dash to the dollar, even more so, and a shunning of these riskier currencies that have been performing very well of late. So it's just pretty much a overview of some of these currencies this morning. Steve, do you want to take over and show us some charts on indices and metals?
Yeah, I'll look at the oil first. So nice little bit of a reversal we've seen at the start of this week. I think potentially it's a short-lived one, but there's room on the downside for a bit more this morning. We talked about last week this shooting startup candle, and we're forming a bullish engulfing candle at the moment. So looking across the daily chart, we're seeing these last 3 days of negative price action. Feels like it's going to continue today. The strong dollar won't help, or will help the move to the downside, won't help the bulls. We still think we're in a decent channel. 64 to 60 to $55, I think, would be the major support below. We got intermediate support coming in at 58.50 and below that at 57.37. So short term, looking like selling rallies is the right way to go. Your stop would be above 63.74, potentially targeting a move down to these major levels, but also buying dips doesn't seem too shabby, but keeping a very tight stop in it. The one that really interests me this morning is gold. I was chatting to Cameron about gold, and
Cameron owes you a few quid, doesn't he?
He does. He copied me on Talking Bull yesterday. He thinks I know what I'm talking about now. Obviously, he hasn't worked out that I don't. Everybody else in here can tell him that. But really, really interesting levels, and don't want to scare anyone who owns gold, whether physically or electronically or virtually. But this, I'm bullish of gold over the long term. Now, this would be really, really nice. I'd love to see this, but I want to sort of like stick a potential for a little banana skin in there. So if we go back to the week of 9th of March 2020 and the pandemic hit, and we saw gold prices drop about 15% from around the 1700 level all the way down to 1450-ish. So that was a horrendous couple of weeks we had when the world fell apart, and we've recovered since then, and we've gone on to make new all-time highs, and we're in a corrective phase. So I think obviously recently I've been advocating selling rallies, and the real target area, initial target area, was around about 1680 to 1700. So we are close to there. We got down to 1710 yesterday. But this does concern me, this level around about 1700, 1705, because if we do get a break of these swing lows, 1660 would be probably the line in the sand. We have potential to have quite a fast accelerated move down towards 1450 again. So for me, that's the main risk, the sort of technical move through this 1660 level. And I think that would be a very, very fast move. We could replicate what we did back here. I don't know what the catalyst would be. It would be like a really big dollar bull run, or something else that sort of impacts on the equity markets, because I think we'll see a similar sort of move initially. If the equity markets have a reversal and a sort of disastrous run to the downside, I think gold will go with it, because you'll have institutional guys liquidating their gold positions, which they see as a safe haven, to fund the equity position again. So that's a little word of warning. But the world's not going to fall apart again, is it? So why are we worried about that? And so I'm really looking at sort of how the momentum's going at the moment. It's sort of stalling. If we draw a trend line on here, you can see bearish momentum is stalling while prices are moving lower. So that indicates bullish divergence. So should we really be looking for a bottom to form around here? I'm definitely going to keep an eye on it, and I think it'll play out over a few days or weeks, but then we know how these moves happen. Everything is supercharged nowadays. We don't have to wait months or years for a move to play out. It seems to happen instantly in this new virtual world that we live in. So yeah, that's just a word of concern. But so from an intraday perspective, yeah, I'd still be looking to sell rallies, taking profit around about the 1700 all the way down to 1660, and then we see what happens at 1660 for that. Silver, I still quite like silver. It's a little bit more of a steady looking chap at the moment. Obviously it's under pressure. It's been dragged down by gold and the dollar strength. So we've got a level around about 25.85 in silver. I think if we get a break of there, potentially we could move down to the $24 level. So again, selling rallies in there stops above 28.15, 28.20, and potentially looking to buy dips, but I'd be a bit wary about the dip buying side of things for these two precious metals. Copper, obviously, that's signaled a shooting star on the weekly chart last week. Bit of a decision at the start of this week. I've got a feeling it has had a fantastic run up, so there's plenty of room for a correction without really impacting on the bull outlook on this. So I'd be a little bit nervous if I had copper longs, but only for the short term. I think we sort of we've got plenty of support all the way down here at 375 down to 350. So that's all cool. Indices, as Joe said, Nasdaq had a bit of a turnaround on the weekly chart. We can see we had a bearish outside candle, which is very scary, a couple of weeks ago, followed by confirmation of that bear move, and the price action has stalled at 12,650 area. We really need to see a break of that for me to be concerned about Nasdaq. Obviously, it does continue to be bought. We've also got on the daily chart, we've got a head and shoulders, potential head and shoulders formation, need a break of the 12,735 and a close below there to sort of form that formation, or for that formation to be considered valid. And then that would have a measured move target of 11,600. So look out for the indices levels here, but we seem to be sort of correcting higher. We had a bullish engulfing candle on the Dow Jones yesterday, very nice indeed, thank you, and a morning doji star formation on the S&P, which also reacted off this lovely looking trendline support, going all the way back from the 23rd of March 2020, which was the end of the scary part of the equity pandemic sell-off, and we've hit it here, and it's reacted lovely from here, hasn't it? So equity seems to have steadied the ship a little bit on the US side of the world. Europeans, a little bit mixed yesterday. We had a dips being bought in FTSE and DAX. And again, you can see a morning doji star formation there. So that's positive, all looking pretty cool. We've got a upward trending resistance line for the CAC. So that'll be tough to get through. South Africa 40, again, these are sort of like pretty phenomenal moves higher over this period. It feels that this is obviously will be quite tied to commodities, and obviously commodities have been performing quite well, but look a bit risky at the moment. The Nikkei, we've got this bullish channel within a bigger bullish wedge or channel. Yeah, bullish channel we'll call it. It's not, well, you could call it a bullish wedge. Really, the trend line should be drawn from there to the higher, to the swing high there. So a little bit of resistance above. China obviously is really, after its fantastic rally, is really sort of struggling, and it's got down to the 18,000 level, and that's quite pivotal. Let's see how it reacts off there. Support below would come in around about 17,500.
All the ranges that you showed on those charts, the ATR, the bottom chart, all were ticking up, looking like they were making sort of newish highs. So an increase in the ranges of these markets suggests an increase in volatility as well. Mm-hmm. So maybe something afoot, something may happen, an event of some sort, maybe.
Yeah.
Maybe it was the China guy yesterday talking about the bubble.
Yeah, potentially. Yeah, I mean, I did see that silicon. I was looking at the shortage of
chips.
Yeah, and they're really struggling to keep up with that, and they import. There's I haven't got the terminology. I don't want to get the terminology right before I sort of go through the story. So
we talked about this previously. The US are talking about trying to partner up with Taiwan for their chips rather than relying on China.
Yeah, it's quite a good piece. It was Bloomberg. Why China can't fix the global chip. It's the global microchip shortage. The country's been the world's vaunted factory floor. Vaunted, nice word. But semiconductors require years of hard-won know-how. I didn't know if that's something to do with the currency, but I don't think it is. And incredible amounts of money to design and create. And it just basically saying that China's can't keep up with the demand. It exports about 100 million worth of chips, but imports more than 300 billion.
Wow.
Meanwhile, China makes 28% of the semiconductor production equipment required by chip makers. Last year, 13.7 million of semiconductor equipment came in from overseas, up over 30%. The shortage of such machines is so severe that used ones from Japan are making their way to China, pushing prices up sharply. So yeah, it's a I hope Bloomberg don't tell us off for sharing that story, but I'm sure it's an advert
Free
for
advertising
Bloomberg.
for them, isn't it?
Yeah.
Shut up, Bloomberg.
So
Stupid fees.
so yeah, it's just interesting, really, that that they are sort of like quite a big importer of the semiconductor, and need that to catch up with the big shortage worldwide that we're seeing.
Okay.
So yeah, anyway.
Right, well, gun to the head yesterday, so there's only two of us, and we picked some ideas as usual. I think we are talking about changing the format, but obviously as we did that yesterday, we had two decent winners, so maybe we'll just keep it as it is for now, Steve. So we had a win on oil. We talked about the gap close on that one, and that worked out really nicely. That went on to hit target and actually go past the gap and continue lower. So yeah, that worked out really well. 2.66R. Steve, you came close to hitting target on gold within our time limits of 9 p.m. I think had you held it beyond that, then that would have also
at 1 o'clock in the morning, wasn't it? I was fast asleep by then, mate.
Yeah, so that was 2.13R. So a decent return yesterday. Let's hope we can continue that today. Have you got anything in mind, or would you like me to go first?
Yeah, you can go first, mate. You sound like
while you were talking, I went on the hunt for an idea and come up with the Nasdaq. I like what you were saying about that. There was some bearish looking candles that had formed on the daily chart. I've zoomed in to try and find an opportunity on the intraday chart. So we've got the hourly chart here. I had this head and shoulders top drawn on from last week, and it was a sort of downward sloping one. So they tend to be more aggressive if they work out. We saw the breakdown there on the 22nd of Feb, and it never really looked back, to be honest. It went on to actually hit that head and shoulders measured move target, I believe, which I had in at 13,043, actually extended down to a 1.618 extension level, so that was quite nice. The corrective move yesterday within the channel formation has been quite nice. I've drawn a Fibonacci levels on yesterday from this high on the right shoulder on the 19th of Feb down to this swing low on the 26th, and we've got a 61.8% level that comes in at 13,327, which worked pretty much to the tick. And we've also seen a break of this corrective channel. So I'm going to back that to continue moving lower from here. It's currently at 13,175. I'm going to target a move back down to these swing lows at 12,673, and I'm going to place a stop loss just above this swing high that we saw in the early hours of this morning at 13,346, looking for just under 3R on that trade today. That give you enough time, Steve?
Yeah, I think so.
What do you got?
Well, I'm just looking at oil, really short-term candles. Look at the 4-hour chart. Now, we've had a really decent sell-off from the highs, and the oil story I don't think is over yet. We've talked about the measured move target. I think we've still got potential to get up towards the high 60s in oil. But obviously, this week has started off on a negative footing. But just the shorter-term charts, we see an inverted hammer here. which is a bullish sign. And on the hourly chart, we also see a bullish engulfing for this semi-doji type candle. Little bit of a move up, swing back lower, bullish hammer formed, and a little bit of indecision, but it looks like it's trying to push higher here.
What about that gap down there? Do you fancy that?
This gap down here?
Yeah.
I fancy, but you know what? This is a bit of a two-way story, and I just think it's about the timing of it. Definitely, as I said, got potential to sort of move a little bit lower, but this just feels to me like a little bit of a crossover in the MACD at a decent level, just a little bit of bullish momentum coming into it. Stories out from oil prices fell more than 1%. Extended losses began last week as investors unwound long positions on concern that OPEC may agree to increase global supply in a meeting this week, and Chinese demand may be slipping. And that also, there's OPEC oil output falls in February on Saudi additional cut. So a little bit of two-way news coming through. So let me, it's just pipped up, isn't it? It was listening to me. Yeah, that's just all our thousands of viewers listening, and they've all preempted that I'm going to say bye. So sell it.
Yeah.
No, so I'm going to get long here, 59.85. I'm going to make the stop 59.50. So it's going to be quite an aggressive stop. In an ideal world, you'll probably have a stop below 59.30, but I'm trying to get some decent R because I want to try and smash and grab, really. Looking for a move up to 60.90. Quite a push maybe today, but that's what I'm going to go for. Buying at 59.85, stop at 59.50, target 60.90.
Superb. Okay, best of luck. So what's going to move these markets today? So we've had German unemployment, which is already out. That came out at 8:55. We've got Eurozone CPI at 10 a.m. CPI to rise 1% year on year, and core CPI to rise 1.4% year on year. And then at 1:30, we have Canadian GDP for the fourth quarter. The Q3 reading was up 8.9%. So keep an eye on your CAD crosses. That may also have an impact on oil as well. So we'll be keeping an eye on that. Some speeches from Fed policymakers this evening as well to keep an eye out for. Other than that, I don't think there's much else. So I guess, Steve, we can round it up for the day.
Yeah, lovely. Okay.
Excellent. Okay, so we've got your two trades. We are selling NASDAQ and buying oil this morning on the Gun to the Head challenge. Steve's bat phone's going, so we'll let him answer that, and we'll be back tomorrow morning.
Cheers.
Yeah, bye.